Hello, my name is Brian Manier. I'm one of the partners at Keystone Financial Group, and I'm one of only a handful of Bank on Yourself authorized advisors in North America. If you're watching this video, then you recently saw or heard something about Bank on Yourself and requested some information. This series of short video tutorials will cover just a handful of the most important topics to help you better understand Bank on Yourself and the practice of using specially structured whole life insurance contracts as a financial foundation. We'll kick this first video off with a reference from the timeless classic written by George Class in 1926, The Richest Man in Babylon. The opening pages of the book talk about the cures for a lean purse. The first cure is to spend less than you make. This, of course, is all about saving, which is really our key point here. Control your expenditures. We also refer to this as Parkinson's Law. Expenses will rise to meet income unless resisted. Savings equals capital. The goal is to multiply your capital. Your money should make money. Protect your capital from loss. It doesn't do any good to make money with our money if we turn around and lose it in a market crash or some other way. Ensure a future income. At some point, all of us are going to want to retire and replace our working income with passive income. The point that needs to be driven home is that it's all about saving. The most important decision you have to make about your savings is where it should live. Most of us are pretty familiar with this concept. If we have a checking or a savings account, then a bank account is what I call a cash repository. It is a place where your money lives. Retirement accounts like 401ks or IRAs are another form of cash repository. Even a tin can in a sock drawer full of cash is a type of cash repository. And nowadays, with Bitcoin or cryptocurrencies and online transactions, your money can actually live in cyberspace. Most of these types of cash repositories are governed by a contract. When you open a bank account, you sign some paperwork. When you make your deposit, that paperwork is a contract between you and the bank that outlines the rights and responsibilities of the parties involved. A whole life insurance policy is also governed by a contract, but a properly structured life insurance policy gives the policyholder some unique rights and some unique provisions that make this type of repository superior to the others. So what's unique about a properly structured life insurance contract? First of all, it's very safe from market volatility. It's contractually guaranteed not to lose money. It's contractually guaranteed to have at least a minimum amount of growth. It has no exposure to stock market or real estate market losses or fluctuations, and it's governed by a regulation system at the state level, which is the state commissioner system. Number two, it's highly tax efficient. The money growing in the policy is tax deferred. We can access that cash on a tax-free basis, and we can pass a tax-free legacy onto future generations. And of course, that's all based on tax laws as they stand today. And thirdly, probably one of the most important features of the life insurance contract is the amount of control that we have over our capital. There are no contributions restrictions, and there are no access restrictions or penalties like we would have with an IRA or even a Roth IRA. A life insurance contract, it's a legal contract between a policyholder and an insurance company, and so there's no reporting requirements. There's nowhere on your tax return where you have to list any information about the life insurance contract. With this strategy comes the ability to bank on ourselves. One of the key features of a life insurance contract is that the policy owner has the right to utilize the policy for loans. And we're going to cover this feature in detail in the next video. So in summary, Bank on Yourself can be a better way to facilitate your savings and allow your savings dollars to do more for you. It's just a different kind of cash repository where your savings can live, and that it is governed by a contract that gives special rights to you as the policy owner. Further, it provides some special provisions that are unique to only certain types of properly structured whole life insurance. If you have any questions or would like to discuss starting your own Bank on Yourself program, please feel free to reach out by email or phone anytime, and we'll discuss how loans work in the next video. As we conclude this video, it's important to understand that with any financial strategy, there are advantages and there are trade-offs. Any life insurance The life insurance death benefits, guarantees, or ratings are based on the claims paying ability of the issuing life insurance company. Life insurance policies can have downsides and risks, such as the fact that policy loans accumulate interest and, if not repaid, could affect the longevity of the policy, impact the cash value, and decrease or even terminate the death benefit. Allowing a policy to lapse may have tax consequences. Bank on yourself policies that are incorrectly structured or even set up using the wrong type of life insurance may be subject to loss of the tax benefits or other benefits mentioned prior. You should always work with a qualified insurance professional who is experienced with building bank on yourself type policies to ensure that your policy is set up correctly to receive the benefits mentioned. Life insurance premiums include commissions and fees, and there may be additional fees for any included riders. Issue of a whole life insurance policy is subject to approval via underwriting and is not guaranteed. The cost and availability of life insurance depends on factors such as age, sex, health, and the type and amount of insurance purchased. Before implementing a strategy involving life insurance, it would be wise to make sure that you are insurable by having the policy approved prior to canceling or changing any existing coverage. Individual circumstances vary, and bank on yourself type life insurance policies are not necessarily the best fit for everyone. Consult your qualified bank on yourself professional regarding your individual situation and goals, and make sure you fully understand your options before purchasing the policy. Thanks again for your time, and I look forward to speaking with you in the near future.